Alright you guys, in today's video, I'm about to show you exactly how I pay my credit card bill to be able to get a score of 772 at the age of 19. Whether you've just got a credit card or you're planning on getting one, this video is for you. So of course, let's get right to it. So, the very first thing that I did to get my credit score up was to understand two very important dates. Number one, my payment due date, and number two, my statement date. These two are hands down the most important ones to know if we're trying to pay our bills the right way. Not even knowing what these dates are causes a lot of us to mess up before we even start. Real talk. So hear me out real quick. Our payment due date is the day where we need to pay off our balance to at least the minimum amount so that we can avoid a late payment on our records. As you guys can see somewhere on the screen, my personal payment due date is on the 4th of every single month. This is the day that I need to pay off my balance to at least the minimum amount so that I can avoid a late payment. And as for our statement dates, these are the days that our banks report to the credit bureaus. The bureaus are the guys that actually dictate what our credit scores are gonna be. So whatever is left on our balance by the statement date is gonna be reported by the bank to the bureaus, which, like I just explained, is gonna determine what our credit scores are gonna be. You guys can actually find your own personal payment due dates and your statement dates on your banking app. They actually make it pretty easy nowadays. So remember you guys, the payment due date is the day where we need to pay at least the minimum amount on our balance. And the statement date is when whatever we have left to pay is reported to the credit bureaus, the people that give out our credit scores. It doesn't matter if you have a $0 balance or $100 balance. Whatever is on there on that day is gonna get reported. After the statement date passes, a new billing cycle starts and you can start spending all over again. The main reason as to why these two dates are so important is because it lets us know when to schedule payments and when to not use our cards. I personally pay my bill down to about 10% of the total credit available to me at least a day or two before my due date. And then I pay off whatever is left in full on my payment due date. Once I do that, I just chill and wait until the day after my statement date passes and I start spending all over again. This all might sound a little confusing, so I'm gonna show you guys an example with my personal card and my personal dates. My personal payment due date is on the 4th of every single month. Remember, this is the day that I need to pay my balance to at least the minimum. My statement date, or the day where my balance is reported to all the credit bureaus, is on the 7th of every single month. And finally, my total credit available to me is $1,200. Let's say I've spent $500 on my credit card for this month. I'm gonna pay it down early to 10% of $1,200. My new balance is gonna be $120. And once the 4th comes around for my payment due date, I'm gonna pay those $120 down to $0. Then I'll just chill till after the 7th of that month. Once the 7th passes, I can start spending on my card again. And that's really it. That's how I personally pay my credit card. Everybody has their own beliefs or their own ways, but really, this is what I found to work for myself. And my credit score is looking right, so I can't complain. So that's a quick, no BS rundown of how I personally pay my credit bill. Let me know what you guys think down in the comments below and hit today's video with a quick thumbs up. It really does help out the channel a ton. So with that being said, I'll catch you on the next one. Peace.